All right, and welcome back to Hospitality Investor News Desk, day 2 at IHIF Asia, and I'm delighted to be joined by Abhijay Sandilya, Managing Director for Japan and Micronesia with IHG. Abhijay, welcome.
Thank you for having me.
Yeah, delighted to have you. And Abhijay, Japan is clearly having a moment. It is on the lips of all of our speakers. It's in our sessions. The investors are talking about it both in the region and internationally. What is underpinning this excitement for Japan?
Great question. We get asked this question a lot. But I think if you rewind the clock to 2016 and pre-COVID, Japan was having a moment then too. Japan was growing from a tourism perspective at double-digit CAGRs over that period of time. And we've always seen a really attractive cost of capital in Japan. So that started pre-COVID. And during COVID, we had tough times, but I think post-COVID, it just picked up where we were last at. In 2019, we had over 30 million arrivals. This year, we're well on track to get to 40 million arrivals at the end of 25. So that all puts together a really fertile environment for the tourism sector, whether it's from a guest perspective who are traveling in and you said it's on investors' lips, it's on guest lips. It's really Japan is it's top of mind for everyone because A, it's a great place to be and it's now really been discovered, but B, the economic environment for investment continues to be very strong. So we've got very, very strong macro and sector-specific fundamentals for travel and tourism in Japan. And a lot of that goes down to a Japanese government plan built in 2016 to get to 60 million arrivals by the end of the decade. Wow. And they're well on the way to that.
Wow. And Japan has also been known as being somewhat of an insular market. So both in terms of tourism demand, but also in terms of the capital profile. Are you seeing that capital profile from being, overwhelmingly Japanese and to being regional, international? How has it changed?
It's changed. The capital profile is quite reflective of the tourist profile that's changed in the recent years. Actually, if you rewind the clock to 2006, IHG has quite a unique business in Japan. We're a joint venture with ANA, the airline. And that transaction occurred in 2006 with a big investment at the time into real estate pre the GFC. And then post the GFC, that foreign capital started coming back in the early teens, 14, 15. And now we've seen the big boost post-COVID, where most of the foreign private equity companies are represented. We did a deal in Osaka. We took over the iconic Riga Royal Hotel in Osaka with BGO, Bental Green Oak, under our Vignette Collection brand. That's an example of where we're seeing foreign capital come in, work on repositioning with large-scale renovations, and then applying our brands into that. So we've got several examples of that, and that's not only us, our competitors, our peers in the industry, all doing that. So I think we and we'll continue to see that just from what's happening around the world, what's happening in Asia. The fundamentals of Japan feel like the strongest, and we've been hearing that over the last few days here in IHIF. Japan continues to punch above its weight, and lead the pack in Asia.
Yeah, it's very exciting. So you've talked about some of the changing profile in terms of capital. What about in terms of the locations? I mean, are you seeing a diversification in terms of the interest in hotel development, hotel transactions outside of the classic Tokyo, Kyoto, Osaka regions, and where is that growth and that interest going to?
Yeah, I mean, the headlines are obviously always going to be Tokyo, Osaka, Kyoto. Yeah. Everyone loves those cities. They have the best airlift. They have the inbound port to come into. But again, I'm going to rewind the clock and talk about 2006 because through the joint venture, IHG's been in most cities in Japan with INA partnership. And now, very much so that we are going into, you're seeing luxury hotels open. This morning, we announced a signing at IHIF with the region going to Karizawa. Karizawa is a luxury destination about an hour from Tokyo, where every affluent Tokyo-siders have second homes. We've got a gorgeous 58-room Regent going in there, which will open in 2028. So that's an example of an expanding buy, but more so, Japan is the third largest hotel market in the world with 1.8 million rooms, and they're scattered across the archipelago of the Japanese islands.
Wow.
And we're now seeing investment within Kanazawa is a market where you're seeing new high-quality supply. We'll open Intercontinental in Sapporo, the first luxury hotel in the city, in about 2 weeks from now. So again, examples of foreign investor-led capital going into outside of Tokyo, Kyoto, and Osaka.
It's a maturing market, but certainly still moving at the pace of an emerging market. It's very exciting.
Yeah, absolutely.
And in terms of your brands,
Yep.
So IHG, runs the chain scale. Obviously, again, when you look at sort of post-COVID, there's been a lot of focus on luxury and lifestyle over the last 4 or 5 years. Where are you seeing the growth in terms of IHG's brand portfolio?
What we're seeing, and this is most pronounced in my career, I haven't seen these fundamentals exist for so long. Across the spectrum, so we call it an all segment growth play because we're genuinely seeing that at all ends. I spoke about the 1.8 million rooms previously. If you look at the brand penetration, compare that to other markets, Japan with the big 4, big 5 hotel brands is sub 5%. In other markets, that averages between 20 and 40%, depending on how you slice the data. So we have a long trajectory across all. We brought Ghana into the market last year, which is at the most economical end of the segment, where we opened 3 Ghanas in Osaka. We will open our 4th Ghana in Kyoto next month. And then in the same year, we opened Six Senses Kyoto. So we're seeing demand, and I think the really interesting play we see across and the fundamentals of that 1.8 million rooms, about half of that inventory is in that 12 to 13 square meter, what we call in Japan business hotels.
Yeah.
And those are massively underpenetrated from a brand perspective. So I think I think the next decade we're going to see more penetration in that segment, and a lot of the talk will be around conversions within that space, but also slightly higher up in the chain scale in terms of conversions. I think that's where it's going to dominate, with construction costs headed to where they are currently headed. I can imagine we'll spend a lot of time converting hotels in the Ghana to up, mid-scale space.
That's interesting. So you see then the conversion market heating up in Japan, and you see them trading up into a higher chain segment in terms of that conversion?
Yeah, last year 100% of the deals we signed in Japan were conversions. This year it's slightly different. If I were to hazard a guess, by the end of the year will be probably a 50-50 mix. But I think conversions will be a mainstay going forward. Again, I'll give you an example. Holiday Inn as a brand first came out of the US in 1973.
Yep. Went
to Japan as its first market. And we've had a quiet period for Holiday Inn. We haven't had such aggressive growth. This year we've opened 5 Holiday Inns. So 2025, 50 years later, we're seeing a resurrection. We've opened Holiday Inns in Tokyo, Kyoto. We'll open one in Sapporo in 3 weeks. In regional areas, in a small town called Kitakami in Iwate Prefecture, we're seeing brands like Holiday Inn going in. So I feel like we'll continue to see penetration even in non-typical, non-tier 1, non-tier 2 cities. And we have a ability to add the ANA co-brand in those locations where ANA is a household brand in Japan, and then Holiday Inn as the might of the largest brand system in the world. So it's a really exciting time to be working in Japan.
Abhijay, you've clearly outlined all the excitement in the Japanese market. Wishing you all the best of success, and thanks so much.
Thank you, and we hope to have IHF in Japan soon.
We do too.
Yeah.